Trading Nut, episode 169.
So if you were to put a fib on the entire leg, we're talking, anything below a 61.8, right? And we're talking maybe like the 70s, the 80% of that leg. What's my target? My target's a new leg. So my target, if that daily, leg is 400 pips, my goal is to get the 400 pips to make the new leg. Especially when we're trending in that market.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders, and welcome to another installment of the Trading Nut podcast. Boy, do we have a treat for you today. We've got Mike Azevedo here on the show, otherwise known as FibsnProfits. Now, look, this guy's going to tell you a story about how he went from starting off with a 2K account all the way up to 6 figures, then from there on the way to 7 figures. He started off with break and retest, went on to Wyckoff and a whole bunch of other sort of merge of things. I won't go into too much detail here, but look, he dropped this trading down from 80 hours a week to just a few and is making more money than ever. He also talks about a 1 to 665 trade, which you'll see in the video we shot after the show. He actually breaks that down, so check out the link below this one to get that video. Look, a couple of things before we get into the show. In fact, there's a ton of things. So the first one is my sponsor BitGet, my new sponsor BitGet. So I would have mentioned last week that you can get $153 if you sign up with them. But now there's another thing you can do as well, and there's an ad in the show that you'll see where if you deposit, you can get up to $3,000 in crypto. Just click the link below the video, or there's one in the card above and you'll find that there. Now, the other thing from my sponsor is my Trading Nut Funded Cup, sponsored by City Traders Imperium. So these guys have got over $190,000 worth of prizes up for grabs. We've got so much interest in this. It's amazing. A lot of traders from Vietnam, funnily enough, a lot of Vietnamese traders who are trading with a style called Kong style trading, which I've never heard of, can't find anything on the internet about it. So if you guys do know what this Kong style trading is, KHONG, then please hit me up. I'd love to find out more about it. Maybe we can get this guy Kong on if it's a person or something. Look, we've also had other traders who have learn the methods of other guests of the show. We've had ICT guys registering. We've had Momo FX. We've had Pips of Persia, Jeffrey Benson from last week, and Michael Huddleston, amongst many others. I haven't even gone through all of them. These are just some of the names that have popped up. There's also been other guys that have studied under, like Rainer Toe and Trader Tom, who are some big names out there on the internet. So look, I'm looking forward to getting this thing live. It's still a chance to register now, so there are links here, once again, up in the card above or below the video. So please hit those and jump on board and let's have some fun. It's going to be awesome. You've got until the 15th of April. You're going to find out more about that in an ad in a second. Now, other things that have gone live in the past couple of days or coming up this week, the new thing coming up this week as well, we've got the Mind Hack number 5, so go and check that out with Andy Murphy. So that dropped this week, and if you're looking to get your mindset on point, go and check out the Genius Trader Club as well. There are links all over the place for that, so go and check that out if you really want to get your trading mind on point. And also the Robot Builders Club, my Robot Builders Club, is still open, so if you do want to try and automate some or all of what you're doing, then go and check that out, because that's what I help you do. Also, the Smart Money Concept Series episode 2 dropped on the weekend. We had the live stream last week. You had a chance to get $100 actually just for attending that live stream and answering a pretty easy question. And the guys from Aerial FX are going to be back on again. So on the live streams next week. So go and check that out. There's going to be, I think, another chance to win $100 there as well. So guys, awesome stuff happening here on the channel. And speaking of live streams, even a new one dropping this week as well. We've got from episode 132, you may not remember him. He went by the name of Master FX Shifu. He's an awesome trader. He's over there on the Trading Nut Telegram chat. That's how we discovered him. He's now going to be doing live streams every Tuesday on a weekly basis for the London Open. So if you're looking to get trades that go 2R plus at the London Open. He's going to do a session then, and we'll be jumping in to manage those trades that sort of run into, multiple hours on the Trading Nut Telegram chat. So you're going to probably want to do both those things. But the first one would have gone live last night, I think, by the time you watch this, if you're watching it the day it drops. But he's going to be doing every week, so you've got next Tuesday to look out for that. It might be Monday, depending on your time zone. All right, guys, enough from me. Let's get on with this amazing, and it is an amazing interview with Mike. Righty-ho, folks, I'd like to introduce you to something new here on the Trading Nut channel. It's the Trading Nut Funded Cup, sponsored by City Traders Imperium Funded Trader Program. You can win almost $200,000 worth of prizes. That's for the top 10 winners. And the top prize takes away a $100,000 funded account with City Traders Imperium. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description. Then sign up for free before the 15th of April 2022 and get 10% off any City Traders Imperium funded challenge just for entering the competition. Good luck, folks, and we'll see you in the cup. All right, folks, here we are. We've got Mike Azevedo here on the show all the way over there in Florida. Welcome to the show, Mike.
Oh, thanks for having me.
So if you guys don't know Mike's name, he goes by FibsnProfits. And you've actually been recommended quite a few of my past guests of the show, not just listeners, but guests. So I'm so happy to have you on. And to start off with, we're going to hear your story. How did you get into trading?
So long story short, I was working full time in law enforcement in sunny South Florida here. And, I wanted to do something differently, and I felt like work was just taking me away from the kids. I've got four kids who are starting to get into their teenage years, and I wanted to find something differently. So one of my buddies who worked with me actually was in trading. He had gotten started doing it and said, "Hey, take a look at this and see if you like it." And immediately I was drawn to it. So it gave me a lot of focus. It gave me a lot of it drew me to it because I wanted something that would give me that kind of attention, that kind of grasp towards something, and that and it worked. I'm glad I made the decision to leave and do this full time.
Cool. And so your buddy who was into it, I mean, what was he like, sort of in the get rich quick mindset, or had he moved on from that and was doing well?
Yeah, no. I mean, his, he's got that steady, he gets a couple of pips a day, makes his 1% a day and goes on about his merry way. So, and I think that's the going into trading. I didn't, I wasn't jumping into, let me make $1 million overnight. I kind of knew going into it, it was something that was going to take a lot of time, a lot of experience, and a lot of training to really get to the point where I could, one, be profitable, and two, make the career change into trading full time.
And was there any sort of correlation between law enforcement and trading that you think might have helped you?
Yeah. I talk about this. So I do a Tuesday Zoom on YouTube, and I talk about it all the time, where I think my military background and my law enforcement background really put me ahead of the game when it came to mindset. It also kind of gave me an idea of what I needed to do to get to the point where I knew I was going to be both from a physical and mental standpoint ready to trade the way I needed to trade. So, in the line of work I did in the military, it was very high speed, low drag, and failure wasn't an option. Meaning, if I lost, people got hurt or people died. And I really had to overcome that, because I'd say my first 6 months in trading, I did everything in my power trying not to lose trades. And it took me sitting back and really just paying attention to what was going on, that I had to say, wait a minute, I do need to lose a couple of trades, because losing trades actually gives me more data so that I can better prepare my entries and take these more, take a higher risk to reward trade. So, I would definitely say, just from an organizational standpoint, because, I think for trading, you need to be organized. You need to be, some of the guys, and especially, if anybody jumps on one of my sessions, you'll see how everything has to be itemized. Everything from my journaling to my preparation going into the week. if I'm not organized, if I don't have all that together, that's where I start making mistakes. That's where I start, I forgot this trade, or I forgot to set a limit order on this. So my background in that really gave me an edge in I guess, lessening that curve into trading.
Hey folks, with so many crypto exchanges to choose from, why not choose the best one for you? And here are 3 massive reasons why my sponsors BitGet are the perfect choice for traders. Number 1, they're ranked among the top 10 largest crypto exchanges for derivatives trading, which is pretty good, right? Number 2, they've got a trading competition that gives you a chance to win a heap of Bitcoin. So if you haven't got any Bitcoin, great way to get some. Number 3, their copy trading platform not only allows you to follow profitable traders, but you could earn crypto by letting others copy your trades too. So to get involved, click the link in the description below or in the card above, and then follow the 4 steps, and you're going to get $153 in rewards or up to $3,000 Tether as a bonus. And so how did you start this journey? I mean, did your buddy help you, or did you go off on your own?
So I'm sure a lot of people have heard of iMarkets Live and I Am Mastery Academy. So that's where I started. I paid my membership, jumped into it, and started learning basic stuff from that academy.
Okay, and so did you end there, or how did that sort of go? What happened?
So yeah, I mean, I was probably maybe a year in, and just testing a bunch of strategies, right? I was doing, I started with the old break and retest, doing some harmonic patterns, and honestly, from there, there was one educator in that academy that I really got a lot of information from. His name was Zach McDonald, and he was doing Wyckoff theory. And it was just something that I was immediately intrigued by, because for me, going into understanding the market, I always told myself, if I'm going to be a really good trader, I need to be a good market analyst first. I got to figure out what the heck the market's doing before I can start throwing money at it. And the level of, I guess, analysis that he was doing based off Wyckoff theory is something I immediately was drawn to. So, from there, I learned what I could from him. And then I started to branch out, and I guess that thirst for knowledge that I wanted is what really drove me to get to where I am today. But yeah, it was, I don't regret any part of it. The journey was great. I mean, it definitely took a lot of losses for me to get to the point where I'm at today. But it was well worth it.
And so you're now a Wyckoff trader, or have you moved even on further than that?
So I would say that I don't know what I would be. I mean, I definitely incorporate Wyckoff 100% into my trading strategy, understanding schematics, understanding where the orders are coming in. But I also definitely incorporate structure. Structure is a huge part of it. Understanding leg structure and cause and effect. So I don't do, I guess there's 1,000 ways to trade, 1,000 ways to skin a cat. And I took what I could out of all of the back testing. I probably spent maybe like 6 months back testing, doing, I want to say it was over 5,000 charts. And I filled 3 3-inch binders full of trades from a demo, from back testing and demo trading. And I kind of just took the best of what I thought was trading, from structure, price action, understanding schematics, and I incorporated it into a trading plan and made rules for myself on, what I was looking for, how I was going to get into trades, how I was going to get out of trades, what I was going to do to hedge positions. And my trading plan at one point, I think, was like 7 pages long, with just, what my rules were, what my confirmation checklist. Since then, with experience, I've there's a bunch of stuff in there that was just fluff. I didn't need it. I didn't need to know that I'm not going to take trades, during Asian session. I just know I'm not going to do it. So it doesn't need to be my trading plan. But yeah, it was something that was extremely rewarding once I understood what I needed to do to get to the point to be successful and efficient in trading.
It's interesting. Like I watched one of your earlier videos where I think it was back in 2020, and you'd done 1,000 screenshots. So you've now bumped that up by another 4K to get to your 5,000.
More than that. I'm creeping up on like 10,000 screenshots.
Right.
because I can you can go, on a Mac, you could just right click and look at how many items you have in there. And yeah, it's somewhere in the neighborhood of like 8,900 screenshots now. So, wow. Which is just more information.
And so just going into the bit of detail here. So you're actually printing these out and putting them in a binder to then reference.
I don't print. Yeah, I don't print all of them. I print ones, and again, like in the beginning, I was printing all of them, and it got to it got to the point where I was asking myself, wait a minute, why am I wasting all this ink and all this paper to print out charts? So then I screenshot and I'll keep them in folders, and what I do is on my desktop I have a pending folder, a pending trades folder, and then from there, once I take a position, it goes into a trade journal folder, itemized by the pair, the date of entry. And then if I don't take the trade, it'll go into a separate folder. The ones I print out are the ones that I will say to myself, you know what, if I have nothing to do, I come over to my bookshelf here on the left. I grab one of my books and I'll review some of the trades, or, something will pop up in my head. I'll be like, you know what, I've seen this before. I've seen this kind of price action or something. And one of the benefits, I guess, to me growing up was I had a photographic memory. So if I've seen something once or twice, so I can go back and I could say, you know what, I remember seeing this in January of 2021 on, Euro GBP. So I'll go back and I'll look it up under that month. And sure enough, okay, this is exactly how I played it then. And so if there's something that, for whatever reason, I want to print it out, whether it was a loss that I took that I want to learn, I'm like, okay, I went back tested it. This is what I should have done to invalidate this trade. I'll print it out. If it's something, like my best trades, I'll print out. Like to date, my best trade is a Chef JPY trade. That's 1 to 655. And that one's printed out. That one I think it's like a 15-page screenshot case study of mine that, I'll eventually, because I'm still in the trade, when the trade is all said and done, I will print it out. I'll put it on the wall. I'll like maybe make a poster out of it or something like that, just because, it's something to be memorialized. It's something that I want to go back and say, man, I took that trade. That was awesome. What's
really interesting is that you got a photographic memory and you're still going to print these things out to go back and have a look at them. Is that, how does that work? Is it like, it embeds it even further in your mind?
Yeah, absolutely. It's, I kind of attribute it to, so I was a big sports guy growing up, and I don't know if the rugby players over there do it, but in American football over here, you always have slides, like the quarterback's always looking through previous shots, how the defense was playing, how the offense was playing. And that's kind of how I look at it. The way I design my trading journal books, where anybody can pick up the book and kind of read the story of what the price action was doing and what I did in that trade. And I want it to be simple there. I mean, there's a ton of notes that I'll put on my screenshot, like when I take the screenshot from TradingView and open it up in PDF, I'll mark it up. I'll put little boxes on, what price action, why this was a confirmation, why this wasn't, confirmation to invalidate the trade. And, all of that information, when I digest it, going back and looking at it a couple of months later, even a year, 2 years later, being able to come back and look at it and say, okay, one, this is what I've learned from it, or two, this is what I need to do to maybe update my trading plan or update the way I'm looking at trading. If you jump on, and one of the reasons I haven't deleted anything off my YouTube is you go back to my first couple of videos. Now I was doing break and retest, and you go now and you can see just the progression of my trading, how it's gone through several lines of progression. Even some of the guys that I trade with, you look back 6 months ago and there's things that I've incorporated into my trading just based off of back testing, going back and looking at, okay, every Thursday I do a huge back test session, and we'll look to see, okay, what do we need to do to update our trading plan or update our entry protocols? Because, if I'm set in stone, one of the things I used to be in the U.S. Coast Guard. And one of the things I always say is, my trading plan, it's written in the sand right there at the beach, and it changes with the tides, right? Because I have to be able to be fluid. If there's something that's changing in the market, I need to be able to adapt to it. And adapting and overcoming what's going on is probably one of my biggest strengths. I can see something, all right, Maybe I've got to do this to incorporate better entries, or maybe I can, reduce my stop losses by looking more into lower time frame confirmations off of a higher time frame point of interest. So those are things that those journal books really give me.
And so, I mean, it sounds like your trading's ever evolving, as with like most very good traders, they continue to evolve what they're doing to get better and better. I mean, can you give us an example of like what you were achieving maybe from a risk to reward or win rate point of view when you're doing break and retest versus what you're doing now? You obviously talked about that 1 to 165 trade, which is obviously crazy, but is that very recent or is that like a year or so ago?
So, I mean, okay, I've been trading since 2018, and I'd say like the first 2.5 years were just me, going through and checking out different types of strategies. When I was doing break and retest, and I'll tell you, I was pretty profitable with break and retest. But man, did I have to work. And I felt like, the whole goal, everyone talks about like financial freedom and getting rid of that 9 to 5, but I felt like I traded my 9 to 5 for an 80-hour a week job because I felt like I was glued to my tablet, my computer. There was just so many hours, and I asked myself, man, what am I doing? So yeah, I was profitable with break and retest. I was taking, the standard 30 pip stop loss on trades, but I was taking a lot of trades. I was taking, anywhere between 15, 20 trades a week. And, I wasn't journaling all my trades because, man, there was just a lot of trades to do. I was averaging, I hit 6 figures in a year doing break and retest. So I was, for me, that was profitable. It was something that, I can replace my full-time salary with a trading salary. Fast forwarding to maybe like a year and a half into me doing Wyckoff theory and understanding market structure and market cycles, I went from 15, 20 trades a week to where I probably take 10 trades a month now. And out of those 10 trades, I may not be making risk percentage, or not risk percentage, but total percentage. I may not be making the 20, 25% I was making doing break and retest, but I'm also not risking anywhere near it. For me, it's my risk exposure and understanding risk management is what really, I guess, started to catapult my profit margin. I risk 0.25% on trades. The most I will risk on any trade will be 0.25%. And there's circumstances where you'll see me do an 1/8 of a percent or a 1/16 of a percent on like order flow plays and stuff like that, where break and retest, I was doing 2% per trade. So I was risking 2% to make 20%. And now I'm risking 0.25% and I'm, clearing my average somewhere in the neighborhood of like 14 to 17% a month. And, on a large scale account, 14 to 17% is great. I don't have to worry about over leveraging myself. Being in the U.S., one of the worst or the hardest part about being a U.S. resident and having a regulated U.S. broker is my leverage is 1 to 50. So, and a lot of people that have that 1 to 500 leverage, they don't understand that margin requirement. But when you're sitting on a 50 leverage, and I don't know about you, I know I've got friends in Australia and New Zealand that are, they've reduced it to like 1 to 30.
Yeah.
That's horrible. Yeah. it's, especially for I consider myself a swing trader with entries on a very low time frame. So ideally I'd love to hold trades, 2, 3, 4, 6 months long. But unfortunately, when you come into like your margin requirements and stuff like that it hurts you. So yeah, it's, I would say where I'm at now, my percentage growth is where I want it to be. And my risk aversion or what I'm risking per trade is fantastic because I can lose a lot of trades. I can lose 16 trades. My cutoff every day is 1%. If I lose 1% on in my daily trading, that's it. I shut it down. I'll come back tomorrow. Well, that's 16 trades at 0.25%. I don't take 16 trades in a month. So losing trades to me, it's very simple. I don't mind losing them. I just know where my line in the sand is. I know where I'm going to stop buying price, or I know where I'm going to stop selling price from, once we break a certain structure point or an order flow play. So it helps me with that.
So with that sort of initial growth with 6-figure growth, I mean, what kind of starting balance were you having to start on to get that 6 figures, and in what time frame?
So, much like everybody that gets into Forex, everybody says, "Oh, just fund your account and start trading." So after 3 blown accounts, I got to the point where I started, let me demo this out. Let me figure out how to do it. Once I got, and it was probably like almost a year after I first got into trading that I said to myself, okay, I'm ready to commit to putting money in the market and start trading. So I started with a $2,000 account, and it took me just over 12 months to get it up to 6 figures. And then after that, once you're in the 6 figures, it really just becomes easy to start compounding, because 10-15% a month on a mid 6-figure account really starts to compound. And then when you hit that 7-figure mark, a 10% month really just starts to compound. It's not as hard as making $5 a day on a trade, where you're making you're making 4 or 5-figure days on a decent size account.
Interesting. Now, if we have to go into sort of details around like your trading, I mean, what timeframes are you analyzing, and what timeframes are you getting in on at the moment?
So, like I said, I'm a swing trader, right? That gets down on the lower time frame for entries. So I will, I always break down the market in 3 time frames. I say a higher time frame, an intraday time frame, and a lower time frame. And, I'll sit up on a weekly, daily 4-hour chart, and really, the 4-hour, I love the 4-hour and the 1 hour, because I can see what's going on in lower time frame. I can see what's going on in higher time frame. So I'll take an entry off of a 4-hour time frame if that intraday, and for me, like that 1 hour, 4 hours, my intraday time frames, if that price action is giving me the entry. But what I'll do is I will go down and try to refine my entry, to the lowest that I can. An example would be like that Chef JPY trade that I talked about. My entry was based off of a 2-hour candle, but because I had the data on, and I waited 150 days for that trade. I had that limit order waiting for 150 days, but that trade, I took a screenshot off of a 15-second time frame where I saw perfect type 1 accumulation. And my entry was the test of that accumulation out of that spring. So 150 days later, off of it was actually a 30-second candle that I took my limit order out of with, I think it was like a 1.6 pip stop loss. And, 1 to 655 R to R later, that's where I'm at. So, I mean, I've taken them, indices, I'll play, S&P 500, US 30, I'll play it off of a 1 second time frame, because you can see that price action, especially on the indices, you could see it so clearly because the amount of volume that's being traded on it. I don't have a favorite. For me, it's just the price action. And one of the things I've said, it's like, the number time frame really doesn't matter to me, because a 5-minute chart and a 30-minute chart, to me, it's the same price action. I can see, those candles give me, the same data. It's still telling me where I'm going to play off of. Now it's just a matter of where, the entry needs to be the mitigation of whatever, I'm going after.
So just to give the guys some insight into this, so you say you had their penny order sitting there for however many days, like 100 and plus days.
Yeah.
So the penny order got hit, yet you took it off a 5-second time frame. Does that mean that you moved the order before it got, or you moved your stop loss in place when you got to the 5-second time frame? How did that work?
Yep. So no, what it was back in March, and maybe I'll pull up the chart. Back in March, I took a screenshot of the price action on the 5-second time frame, and based off of that chart at that time, I had set my limit order. I deleted that limit order. I deleted that limit order when it was no longer valid based on my confirmations. Fast forward like 3 days after that price action, it now became valid again because now it held structure from that point. So until that structure point was no longer valid, that limit order was going to be set. So I actually set that order back in, I think it was like March 6th or March 9th, and it got activated sometime in I think late September. So what I do is any order that I do that with, I have a separate spreadsheet that I use to keep all my open pending orders. I have a dry erase board that I kind of split into quadrants, and, whatever's in the top right-hand corner is all my pending orders. And, on Fridays, I take my Friday afternoons to go through and journal all my trades that I haven't journaled and update my board. So if something's not valid anymore, it gets off the board, I delete it out of my MetaTrader. And if something does become valid again, I have that information, I have the data. That's why I take so many screenshots, because 150 days later, you're not going to have a 1 minute time frame, let alone a 5 second time frame. So having that information, the data never gets deleted if you screenshot it and had it, so.
I mean, I find it absolutely fascinating that you can pick a 5 second entry like months out from when it gets triggered and get that entry to go 165 R with a tight stop. So, I mean, what is how did you get to that point? What was the sort of trick to get to that point? And what would invalidate a trade for you where you go, that's now invalid, I'll reset it, especially that far out is what I'm trying to get my head around.
So it definitely took a long time for me to get to the point to get to those kind of entries. I started off trading, on definitely higher time frames, 30 minute, the H1 time frames. Slowly I started to get into lower time frames, even the 15. I remember saying to myself on a 15-minute chart, man, this is just way too fast. And, I remember getting on the 1 minute and I'm saying, oh, this is just way too fast. And then I remember getting on the 1 second and I'm saying, oh, no, this is, 1 second time frame. I've got at least 3-4 minutes before I can, before I set my limit order or market execute. It definitely took, I would say the biggest contributing factor was experience. When you see the same price action on a daily chart, on the 1 hour chart, on the 30-minute chart, 15-minute chart, 5-minute chart, 1 minute chart, and then the 15-second chart, the 1 second chart just means that you just have to see it faster. And I would say I would attribute like my success in seeing it to just game planning. When I'm staring at the chart, I'm like, all right, I'm going to take an entry if price does this, right? I already have it in my head. What scenario gets me into this trade? If I don't see those scenarios play out, I don't get into the trade. No break of structure off of this, or I don't see, price reacting from this specific point. Yeah. Okay. No trade. And that kind of contributes to my low trade count each month. And also it just reduces the amount of losses I take.
And so with that, were you talking like 10 to sort of 17 trades or something like that, 10 to 20 trades a month? How many of those would you win and how many would you lose with this approach? So I am on average like a 35 to 40% winning percentage. I don't win, I'm nowhere close to like some of these guys that are like 80, 90%. No, I mean, right off the bat, I'll tell you, I lose, not that I win, I lose 7-8 trades, out of the month. And I'm okay with that. Like I said, for me, it's all about the risk to reward. So, on a trade like that, that Chef JPY trade, I'll tell you right now that limit order wasn't 0.25% of my account. I didn't even need to put 0.25% on that thing. In reality, because I trade for a prop firm as well. On my prop firm account, I threw $50 at it. On my personal account, I threw a couple $100, but it was nowhere close to my 0.25%. Because on a 1.6 pip stop loss, you don't need to risk a lot. When you're catching, I think right now, I want to say it's gone almost 1,000 pips. You don't need to risk a lot on that. Yeah. Okay. Right. So the risk is really low in some instances that because look at it, if you get that stop loss wrong, or right. I mean, I suppose do you have any issues around spread taking you out? So that is the biggest issue I do have is the spread. Obviously when you're trying to get these tight entries, especially when they're delayed entries, right? Because the spread, right now during Sydney Asian session, the spreads are ridiculous. Where during the height of like London crossover into New York, you're going to get, especially on some of these like majors and stuff like that, you'll get really low spread. So one of the things I have had to do, and this is something I've had to incorporate,
is depending whether it's a buy or a sell, what am I going to do as far as spread? On the buy side, I'm a little more protected. On the sell side, obviously, I have to be a little more forgiving to the spread. I'm not, if EU is sitting at like 2 pipettes every now and then, I may have to go up to a half a pip to add into my spread, just because, we may get a little bit of volatility. What if the entry comes in right at London Open? Well, right at London Open, you're going to see a spike in spread. And the last thing I want to do is see that, all right, the trade played out great, but I got taken out by the spread.
And how often has that happened, and how frustrating has it been, and how many walls have you lost because of it?
So it's not walls, it's phones.
All right.
Yes. There's that or there's been a couple of monitors that I've had to replace. So the joke is when I buy a monitor off Amazon, I always buy the warranty for it, because I go through them pretty quickly. I mean, it happens, and it's and it sucks. I mean, it is what it is. I know people complain about it all the time. I live it. I'll be there where price comes in, the spread hits exactly where my stop loss was on a spike. And then, all right, there we go. And you'll be watching the spread sitting at, half a pip. Oh, spread went to 1.2 pips, took me out, and I'm like, that's just ridiculous.
Yeah, it is. It is. Now, what about something that, I suppose, if you had to give somebody a step-by-step process to get to the point where you are now, what would you recommend they do?
So I would say this, right? There's always start with structure for me. And it's not, one of the things I had to learn is it's not every high and low means anything. It's really just the highs and lows that create new highs and lows. I really had to learn what the leg structure was. I had to unlearn what I was taught was structure. And once you get that down, then it's understanding cause and effect. If this low did not create a new high, then it's not important to me. If this high didn't create the new low, all right, whatever. It's just noise. And then from there, learning the Wyckoff schematics was probably the pivotal moment in my trading career, because it really gave me clarity on what the market was really doing. And I would say that, one of the traps that I fell into was, I read a couple Wyckoff books. I saw these schematics all over the internet. I printed them out, and then I tried to play like tic-tac-toe with them. I tried to take that overlay of that chart or of that schematic and put it on a chart and say, okay, this is what's going on. When I stopped doing that and I just started to really understand what was happening in the schematic, what was happening, why was price action moving the way it was moving, that's when I really started to understand the analysis part of the market. And that's probably the biggest thing that I tell people that are on my streams and stuff is, don't just put these, don't start naming the anatomy of a schematic just because that's what it looks like. Truly understand, well, what's that price action doing? Are they filling orders there? Was this the manipulation? Because, everything's subjective, but, I deal in facts, right? So what do I know? If I can look at that chart and ask myself, what do I know? What can I prove? What probable cause do I have that this is what's happening in the market? I go off of that, because everything else is just subjective. Everything else is noise. Everything else is intentional.
And you've got the name FibsnProfit. Was that just an old name, or are you actually using Fibonacci in what you do?
Oh no, I do. It took me a long time, but my entries are based off of fibs, right? My entries are based off of a 50% and an 80% mitigation of whatever the manipulation was. And it took me a long time. It took me almost like 2 years of just back testing and finding that if I can find the right candle or the right price action within a schematic, that price with a very high degree of probability reacts off of the 50 or the 80% of it. So that's where that name kind of came from.
Well, interesting. Now, what about from a mindset point of view? Have you got sort of things that you've incorporated into your trading that help you with any mindset issues apart from the multiple monitors and the Amazon warranty program?
So, I mean, there's two parts of it. Everybody who's been in trading, and if they haven't, should probably get into the Mark Douglas, just everything Mark Douglas has ever done. Understanding, part of his teaching is probably what kind of guided me throughout my journey. One of the things that I do regularly, though, is I need to find an out. One of my biggest things before I got injured was, I used to love doing yoga, and, I would do yoga just before getting on the charts. I would wake up, do my stretching, then start doing about a 45-minute yoga session. And that just gets me in the right state of mind. That gets me in the right clarity. I also, I talk about being physically and mentally prepared for trading, because I do not, when people ask me, how's trading going, or, what are your thoughts on trading? I tell them, I go, it's the hardest thing I've ever done in my life. And I mean, I listen, I was in the military. I was, I did some very hard stuff. I've been in law enforcement where I've had to do a lot of hard stuff, a lot of life threatening, instances. And this is still, both from a mental and physical standpoint, it's probably the hardest thing I've ever had to do. So finding an out, like I talked about, replacing my 40-hour week job for another 40-hour week job on the charts. The whole reason I got into the strategy that I kind of employ now, it keeps me off of those charts. It allows me to get into other things that kind of just gives me a break. You need a reset. I don't, over the weekend, Saturdays and Sundays, I don't do anything trading related. I used to mark up charts on Sundays. Now I do it on Mondays. I have a complete separation from trading over the weekend, and that just helps me come back, refreshed and ready to go for the week ahead.
Cool. Now, if there was one thing you'd recommend any retail trader spend the next month mastering, what would it be?
So, I mean, again, there's 1,000 ways to skin a cat. I'll tell you this, from a retail perspective, right? The guys that trade head and shoulders, the guys that trade flag patterns, the guys that trade, double bottoms, double tops, M's and W's. If I were to give one suggestion, it would be like, how can you make your trading better? It's just learn a little bit of Wyckoff, because, people think that Wyckoff is this mysterious, like voodoo magic science. It's not. It's retail trading. Head and shoulders pattern, it's an accumulation or a distribution schematic. A flag pattern's a reaccumulation or a redistribution. But just understanding, and that's something I didn't have when I was a retail trader. I didn't have that understanding of what the market structure was. I was just, it's a flag pattern, so I got to be, it's a bullish flag pattern, I got to look for buys. Where if you're in a bearish market and you have a bullish flag pattern, get ready, because you're going to probably be in a redistribution. You just need to wait for a new low, and you can sell it. So for a retail trader, I would say just dive in. I mean, you don't even have to do a lot. Just a basic understanding of the directional bias of the market, and then understand what continuation moves are, like redistributions and reaccumulations. And then just understand what your retail patterns are actually doing. Are they distributions or are they accumulations? One of the things that, people always just, again, the Wyckoff traders that will take a distribution schematic out of a book and put it on a chart and say, this is a distribution, and not look at anything else, potentially could be right. But you have to look at it in the market cycle. Are you in the top side of your market cycle, or you're on the bottom? Because if you're in the bottom, you can't be distributing orders from a plain distribution schematic from a bottom of the cycle. It can only be an accumulation, or it's going to be a continuation move, a redistribution. Those are things that, I've definitely grasped very, very quickly, and it's helped me, with my equity curve.
And so what would be the best place if somebody had to go to one place and find out about Wyckoff and give themselves that sort of refresher course, or just that starter course? Where'd you say go?
I would say you've got to go to, I call it like the Wyckoff Bible. It's a book by Ruben Villamosa. It's called Wyckoff Methodologies. You can find it on Amazon. It's like $12, but that's probably the foundation for understanding what the anatomy of a schematic is, what it's doing, and why it's doing it. And from there you can kind of branch out, but everybody that's in my Discord, that's the go-to. Hey, I'm new. I want to learn, some Wyckoff. All right, well, buy this book on Amazon or get it from a friend, and read it. It's a quick read. We've had, my buddy Sam and I who have our Discord there. Sam actually reached out to Ruben, the author of the book, and we had him on we had a Zoom call with him. We've actually done it, I think, 2 times now. Ruben lives in Spain. There is a little bit of a language barrier. So when you read that book, just be prepared, because it was originally written in Spanish and then translated to English. So it's especially if you're a grammar OCD like guru, you're going to have issues with the book, because you're going to be sitting there with a red pen and stuff. But the foundation is there, and that's probably the best starting point.
And okay, we'll hook that link up to that book in the show notes. Now, we've talked about entering the trades, and you got your 1 second entries and stuff. What about exiting the trades? How are you getting such huge risk to reward trades in some cases? So the way I look at it is this, and let's just take an example, right? So we are in a intraday time frame, right? Where look at a daily or an H4 time frame, and prices come. We're in a bullish market, and prices come back into the lower, the lower extreme of that leg. So if you were to put a fib on the entire leg, we're talking, anything below a 61.8, right? We're talking maybe like the 70s, the 80% of that leg. What's my target? My target's a new leg. So my target, if that daily, leg is 400 pips, my goal is to get the 400 pips to make the new leg. Especially when we're trending in that market. What I do to offset that, though, is I'll hedge positions. So if I start to see that order flow is breaking down and I'm in that buy, I'm going to hedge a position for the sell based off of lower time frame confirmations. So what it allows me to do is it allows me to take more volume off of my sells and not my buys. Because in the long run, if we're going to continue in a trending market, I want to hold it for the 400, 500, 600 pips, where, if I can get more volume being held up until we get to that high point, that's the goal, right? And what I'll do is I'll hedge in those sells and get those short little like intraday entries where I'm holding them for 2, 3, 4 days at a time, and just play that ping pong game. But it's a ping pong game over the course of a week, 2 weeks, 3 weeks, even a month. And that's kind of what I do to like offset the chance that, I was 800 pips in profit and this thing came all the way back to break even. No, I've scaled off. I've taken volume off. Yeah. So in taking volume off, you're doing that by the selling positions, right? Versus you're not that. Correct. Yeah. Okay. So the buy's still in there at full volume, but right. Nice. That's awesome. That's a nice little approach. And what about the pairs that you're trading? We haven't even asked that.
If it's a chart, I'll trade it. I don't have I definitely have my favorite pairs to trade. Obviously I prefer the pairs that have the lowest spread. So it's all the majors, because the lower the spread, the tighter the entry. But I'm very partial to, US dollar crosses, and then all the yen crosses are my go-to currency pairs. And then I'm just, the last 3 years running, my most profitable assets have been indices. So in 2020, it was US 30. In 2021, it was S&P 500. And so far, this year, NASDAQ has been really giving me the profit margin, against all the other three. So, I dabble in metals. I do silver and gold. Not so much. I'm not a huge gold or silver trader, just because all of the brokers I use, the spreads are just ridiculous. So it's not worth it. The risk to reward isn't there. And I used to dabble in oil. I just use oil now as a comparable strength analysis towards what I'm going to do with some of the other pairs. There's one question I haven't asked, which is, what's your typical trading day? I'm 40 years old, so the days of waking up for London session, which would be 3 a.m. my time, are long gone. So I wake up, during the week, based on my journal for the last 3 years, my top 2 trading days of the week are Thursdays and Fridays. So Thursday and Friday mornings for me, I make sure I'm up, about 5:30 in the morning, and I start to prepare my day for trading. Earlier in the week, Mondays are my sleep-in days. Mondays are my paperwork days, my preparation days. Tuesdays and Wednesdays, I'll wake up, sometimes 10 minutes before New York Open, sometimes an hour before New York Open. And it's kind of just seeing if there's something that comes into my point of interest. Okay, I'll get ready for the trade. But I'm not a trader of opportunity. Like I don't jump on the charts and, what am I going to get into today? I've already done the prep work. The first of every month, I do a top-down analysis on all of the currency pairs that I trade, and the futures, charts that I trade as well. So I've got my top-down analysis done every month, and then on Mondays, that's like my prep days. So what I'll do is I will have alerts set. I will have my points of interest off the different time frames that I'll be looking for price to come into and give me the price action to take trades off of. So Tuesday or Wednesday, I wake up, I get on the charts, I start just cycling through, and guess what? No alerts going off and nothing's near my points of interest. All right, then there's no trading to be done, and I'll do whatever else I need to do those days. Thursdays and Fridays are like I said, my biggest trading days. So those are the days that I want to make sure that I'm on the charts. I'm there for any price action that happens that I can get into trades. I'm pretty much done trading. I would say my hours of trading are from 6 a.m. on Thursdays and Fridays till maybe 11, 12 o'clock, my time. So about 6 hours is my trading window. And, I have certain rules, like I don't trade towards the end of New York session because I don't want to deal with the broker manipulation to get stopped out over changeover. I just based off of my back testing and the way I like to trade, I don't take positions during Asian session. So for me, the golden, that golden window is London into like midday New York. So the entire London session is a great time frame for me to really find those positions. And if I don't get it during those times, then, all right, I'll just wait for the next position.
Now, you mentioned getting in on the Thursday and Friday, so just before the weekend, and you hold it for multiple days. So you often hold across the weekend, is that right?
Yeah. I'll hold over the weekend. Now I'll hold over and again, it depends on the position. I definitely don't, cause I've been there. I've been there on a GJ trade holding a buy, and, the market gapped like 115 pips and I lost a significant amount of money from it. But I make sure that, I'm not getting into a trade on a Friday at 2 p.m. where the market's got 3 hours left. Most of the positions I'm getting into, by the time the weekend comes up, I'm already almost 80, 90, 100 pips in profit. It'll be at reduced risk or it'll be at break even. I may have already taken, one of the things I like to do is I'll by taking what I risked on the trade out at a certain point, that trade's essentially risk free, even though my stop loss may not be at break even. So I just make sure, and that's like on Fridays, those that, follow me and know how I trade, I don't look for trades late on a Friday. Most of my trading on Friday, it's, if I'm not in by, the start of equities open, which is 9:30 Eastern, I'm not looking for a trade, maybe a quick little S&P or US 30 trade going into like that hour window after. But other than that, I'm pretty much done. And one of the things I've done to make sure I'm not getting into those trades, my journal days on Friday. So, when I have a couple of trades that I've got a journal, all right, that's it, shut down my MT5 and let me start working my journals, get this done so I can get all my paperwork done for the week.
Awesome. Yeah, cool. So you're completely mitigating that weekend's gap / horrific spread come the start of the week. Now, right, let's jump into some quick fire questions here and we'll wrap up the show. So how long did it take you to go from newbie to consistently profitable?
I would say just under 2 years. Just under 2 years.
What's your favorite entry setup?
So I'm a Wyckoff trader. So type 1 schematics, whether it's an accumulation or a distribution, by far. 3 drives, give me the manipulation, break structure, come back and mitigate and give me that entry. That's my favorite way to trade.
What strategies do you use to exit or manage trades?
So ultimately it's going to be, the intended take profit that I'm looking for, whether it's that high or low or a complete break of structure. So, if I'm holding that trade for 2, 3, I'm holding a Euro USD trade from September 28th still, and I have no plans of closing it until we break lower time frame structure. When we break that, then I'll start looking for buys, and I'll definitely hedge out and close out the position. But, as far as exiting the trades, I've taken volume off, so it's either going to hit my break even, or it's going to continue in the way that I'm going to go with it.
What's your recommended trading book or resource?
Like I said, the Ruben Villamosa book, Wyckoff Methodologies, is probably the go-to for me. And the outside of that, there's 3 Jesse Livermore books that I found just extremely helpful on Wyckoff itself. I would dive into those. He's only done 3 of them on Wyckoff, and all 3 were extremely important in my progression.
What's your preferred broker and trading platform?
My preferred broker is different than what I use. I would love if there's such a mysterious cat of a broker that has extremely low spreads, like an ECN account that doesn't manipulate the market. I would love that. But, so I use Awanda as my currency broker just because I'm a US resident. And, when you get to a certain amount in your trading account, you don't want to have a broker in some, Caribbean island with a post office box. If something happens, I need to call up, I can't get a hold of them. So I wanted a regulated broker. So I use Awanda for my currency account. And I use FX Choice for my commodities, metals, and indices.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Do you want to walk us through your worst ever trade?
Sure. So I was trading US 30. I was in a buy on US 30, and it was January 2020. The US drone strike on the Iranian general in January of 2020. It was coincidentally the same time that US 30 had just broken a key milestone. I don't remember what the number was, but if it was like, we had been in like 22,000 months and it had just broken the 23,000 mark or something to that effect. So, I was in the buy. It was late afternoon, and and this is one of the reasons I no longer have my MetaTrader on my phone, because, what I had done was I had just typed in on my phone the stop loss to go to break even. And again, for so many months, I was so used to typing in 22, whatever. So we had gone into 23,000 or whatever it was, 24, whatever it was, that number. We had just gone into the new century mark on it. And the market was getting ready to close. I was probably like 200 points in profit. I had already taken some profits. I had closed out what I had risked on the trade. If I remember correctly, I think it was like a 30 or 25 point stop loss on US 30 was the original risk. So my 0.25% was based off of a 25 or 30 point stop loss. So, whatever, I closed out everything, I had moved it on my phone, and I was out grilling in my backyard when my wife yells at me and says, "Hey, there's a US drone strike." It was right at dinner time, like 5 p.m. Eastern. There's a US drone strike that just hit. And I was like, oh man, well, I guess my US 30 trade hit break even. And, when the market opens the hour later at 6 p.m., the market had gapped like something like 1,800 points. And if you were, so instead of having a 30 point stop loss, I had almost a 2,000 point stop loss. And it was the worst loss I've ever had in my life. It was a 6-figure loss.
Whoa.
And at the time, it was a good chunk of my account. So ever since that day, MetaTrader's not on my phone. I only use it on my desktop. I call it my command center, all my monitors, my computer, all that stuff. If I don't have it on my desktop, then I don't trade it. I have a little iPad Pro that when I'm traveling, I'll trade from that. But yeah, it's no more on the phone. Yeah. It was a very costly lesson. Yeah. Cause you're just typing it in and you don't see it. At least on the desktop, you see that, for me, it's a bright red line that I can drag. And that would have been so much easier. I would just dragged it up to the break-even mark. So yeah, that was my worst trade ever.
Damn. Now, last question of the show. If you could leave our listeners with one piece of advice, what would it be?
And this is primarily for like newer traders, I would say, and I say it all the time, don't be in a hurry to lose money. This is the hardest thing I've ever had to do, don't judge yourself against everybody else. For me, it took 1.5 to 2 years to get to the point where I was at least consistent and profitable. It might take you 5 years. It might take you 6 years. Would you ever if you look at it like this, would you ever board an airplane with a pilot that's been, he's learned to fly on his phone 3 weeks ago? Would you ever get on that plane? No. You've got to, for me, trading is a profession, right? It's not a side gig. It's not something I'm doing to make money very quickly. It's a profession. And I treat it as such, right? So, understanding the entire profession itself and, getting to the point where you're preparing yourself mentally and physically, you are understanding whatever strategy you're doing, understanding that, okay, I've back tested the strategy. I've demo traded the strategy. I've understand how to, employ risk management. I've trade management. For me, I think trade management is probably the hardest thing that I had to learn. But putting all those pieces together and then get to the point where, okay, I'm going to throw some of my equity at it. Or I'm going to go through a proprietary firm and use their equity. Don't be a professional trader, 3 weeks in and expect to have some key results. Save your money, learn how to do this properly and then start investing into it. That would be my biggest takeaway.
Cool. Awesome. Well, look, before you wrap up, what's the best way for the guys to get hold of you?
So you can reach me on Instagram or Discord. It's FibsnProfits on Instagram and on Discord. And if you do message me, I get a fair chunk of messages a day. So just bear with me. I get to them, but just like I said, I do a YouTube every Tuesday, 7 p.m. Eastern. It's open to everybody. You can jump on and see how we trade and what we do with the market.
Well, look, a big thank you to Mike for sharing with us today. Everything we discussed here, along with all those links, are in the show notes. To find them, simply search for Mike or FibsnProfits in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. Righty-ho, folks. There you have an interview with Mike, done and dusted. Now, just to remind you of all the things going on here at Trading Nut, we've got that video that Mike did after the show where he breaks down on a price chart his 1 to 665 trade. Got to go and check that out. The sponsor, one of my sponsors, BitGet, my crypto sponsor, they are giving you guys a chance to get up to $3,000 in crypto if you join up with their exchange and do a few things. They also have a $153 reward as well if you follow a few instructions once you join up over there at BitGet. So find the link, go and click that, and you'll find out more information about it. Also, the Trading Nut Funded Cup. Doors are still open for that. If you do want to take part in this demo trading competition where you can win up to $190,000 worth of prizes, that's sponsored by my main sponsors, my gold sponsors, City Traders Imperium. So doors are still open for that. MindHack number 5 is up there on the YouTube channel. Go and check that out to find out the science to success with Andy Murphy. And if you're looking to take your mindset stuff even further, then I do recommend checking out his Genius Trader Club. There's a free webinar you can check out over there. Links are on Trading Nut. Find the mindset link at the top of the navigation. Other things, Robot Builders Club, yeah, doors are still open for that. So I'm still taking on members to help them automate all of what they do, or even some of what they do, and just create a semi-automated trading robot to get them through what they need to do from a trading point of view on MetaTrader 4 or MetaTrader 5. Also, my Smart Money concept series with the team at Aerial FX is still running. We've got the live streams with those guys. Remember, $100 was given away for guys who attended the live stream last week. So they'll be live again next week, and you've got a chance to get another $100, I'd say. I think they did say they were going to do it again next week. So check that out. And the newest live stream with Master FX Shifu has gone live now. We've got it every Tuesday here, London Open. He's going to be managing those trades in the Telegram chat, but going live and getting you into those trades at the London Open on a Tuesday. So if you're looking for something like that, then go and check it out over there on the Trading Nut YouTube channel. Until next time, guys, thanks for watching, thanks for listening, and we'll see you in the next one.